earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Varatharajan Sivashankaran from Antique Stock Broking Limited. Thank you, and over to you, sir.
Thank you. Good evening, everyone. It is my pleasure to welcome the management of MGL and all the participants to this results conference call. We have with us Mr. Ashu Singhal, Managing Director, Mr. Sanjay Shende, Deputy Managing Director, Mr. Rajesh Patel, CFO, Mr. Mukesh Panotra, AVP Marketing from the management side. Before handing over the call for the opening remarks to the management, I would like to run you through the disclosure and disclaimer as well. Some of the statements made in today's discussion may be forward-looking in the nature, and we believe that expectations contained in the statement are reasonable. However, these statements involve a number of risks and uncertainties that may lead to different results. We urge you to consider that quarterly numbers are not a reflection of long-term trends or indication of full-year results. Having said that, I will now hand over the call to the management for the opening remarks. The floor is yours.
Thank you, and a very good afternoon to all. And I welcome, on behalf of MGL management, I welcome all to the earnings call of MGL for the third quarter of the financial year 24-25. I would like to thank all of you for attending this call today. MGL continues to create CGD infrastructure across its business segments in the licensed areas. During the quarter, 98,469 domestic households were connected, and therefore we have established connectivity for nearly 2.68 million households in the cumulative manner. We have laid 99.07 kilometers of steel and PE pipelines, taking the total length to over 7,224 kilometers. We also added 9 CNG stations during this quarter. And with this, we have 361 stations as on 31st December 24. We also have added 83 industrial and commercial customers during this quarter. And as on 31st December, we have 4,974 industrial and commercial customers. In relation to our Raigad geographical areas, up to December 24, we have connected 87,794 domestic households and 55 CNG stations, which are currently operational. During the quarter, we have laid 12.41 kilometers of pipeline in Raigad, taking the total length to 445.67 kilometers. With respect to Unison Enviro Private Limited, the wholly owned subsidiary, the company has added 3 CNG stations during this quarter and total of 67 CNG stations as on 31st December. During the quarter, 4,774 domestic households are connected and cumulative household connections are at 34,003 for UEPL. And they have 63 industrial and commercial customers as on 31st December. Average gas sales for the 9 months ending 31st December 24 is 4.006 MMSCMD, whereas it was 3.554 MMSCMD in the corresponding period last year, which is an increase of 12.75%. Sales volume in the case of CNG have also increased from 2.566 MMSCMD to 2.859, which is an increase of 11.44%. In case of industrial and commercial, the volumes have increased from 0.482 to 0.604 MMSCMD, which is an increase of 25.52%. And the volumes for domestic PNG has increased from 0.506 to 0.542 MMSCMD, which is an increase of 7.23%. During this quarter, the overall average gas sales volume is 4.116 MMSCMD, as compared to the previous quarter volume of 4.042 MMSCMD, which is an increase of 1.84%. Sales volume in the case of CNG is standing at 2.919 as compared to previous quarter of 2.886 MMSCMD, with an increase of 1.16%. CNG volume of 0.162, and PNG volume of 0.013 MMSCMD. MGL as a consolidated entity has achieved total gas sales volume for 9 months ending December 31st, 2024 is 4.181 MMSCMD. A scheme of amalgamation or merger of UEPL with MGL was approved by the board in October 24 last year, and the scheme was submitted to NCLT Mumbai on December 2024, and the matter was heard by the Mumbai bench on January 17, 2025, and they have reserved the pronouncement of its interim order. With respect to Mahanagar LNG Private Limited, a JV of MGL with BLNG, in the business of operating LNG as a fuel to vehicles, for 24, and has sold during the quarter 91 tons of LNG per day. It may be noted that there are reduction in APM allocation in 2 tranches in the month of October and November across all CGDs. However, part of the APM allocation has been reinstated with effect from 16 January 25. Thus, currently, MGL is having 100% APM allocation for its domestic gas and approximately 50% allocation for its CNG sales volumes. There is a positive development that in a Mumbai High Court order dated 9 January with respect to suo motu public interest litigation, they have flagged serious concerns over worrisome pollution from a committee to study feasibility of phasing out diesel and petrol-driven vehicles from the roads of Mumbai and permit only motor vehicles which run on CNG and electric charge to reduce pollution to the vehicles. Further, the court has directed MPCB to vigorously monitor and take stringent action against polluting industrial units in the region. In response to this, the Department of Maharashtra has issued notification forming committee on 22nd January to study and give their report within 3 months' time under the chairmanship of Shri Sudhir Kumar Srivastava, retired IAS officer, wherein MD MGL has been included as one of the committee members. The Mumbai High Court order is a very positive development for controlling pollution in the city of Mumbai and MMR region, and has provided opportunity to companies like MGL also, who are providing cleaner fuel for transport sector and industry to contribute to the protection of environmental pollution. This is in line with what has happened in NCR in Delhi also a few years back. MGL continues its journey of diversifying and seizing the opportunity in the new energy-related businesses by investing in a greenfield project for manufacturing of lithium-ion cells for electric vehicle batteries and other applications. The company has entered into joint venture agreement with IBC based out of USA for setting up a PV facility in the state of Karnataka in this quarter. MGL has invested rupees 35 crore for equity holding of 44% in JV company for Battery Company India Private Limited in the month of January 25. MGL for its annual report 24 has bagged a bronze award at 14th PRCI Excellence Award 2024 for its remarkable annual report from Public Relations Councils of India. In January 25, MGL has been conferred with Green Tech Global Workplace Safety Award 2024 for its outstanding achievement under Excellence in Safety Training category. I am happy to announce that board has approved an interim dividend at the rate of 120%, that is rupees 12 per equity share for the current financial year. With this, I conclude and would now like to open the floor for the questions. Thank you very much for patience hearing.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir, and congratulations for the good set of numbers. As you mentioned, the recent news flow, Government of Maharashtra has set up a panel and exploring phasing out of petrol and diesel vehicles in the Mumbai metro region. We wanted to understand how it will be implemented. That's one thing. And what kind of CNG volume growth you can see from this kind of a decision? Any ballpark number, if you could share with us, that would be really helpful.
It is a very preliminary stage to predict that how it will be unfolding itself. The main point what we wanted to make was that pollution is increasing in Mumbai, which is known to all the citizens here. They're getting impacted. So taking note of this, Bombay High Court has suo motu taken a PIL and given this direction that they wanted to take immediate steps for in two particular sense. One is the vehicular pollution, which is they wanted to replace petrol and diesel in a phased manner by electric vehicles and CNG. And second, the polluting industries can be moved out or they can be promoted to use gas as a fuel. Similar developments has happened in the late 90s or early 2000 in NCR. And we have seen that even in a span of 3-4 years, the CNG volumes have picked up in IGL in that particular area. So it depends that once the committee gives its recommendation in 3 months' time, which is the time given by the court to submit its report, if similar, NCR and Mumbai are different regions. Here the land problem is much more severe. So depends on what type of allocation or what type of implementation plan is agreed by the government and authority. Currently CNG volumes are growing at the rate of around 11% in 9 months of last Q3 and this Q3. So that depends on how the recommendations are implemented. We can see a growth of around 15 to 20% in case everything goes in favor of CNG.
Sir, Mumbai High Court also directed to BMC that the city bakery units should not use the polluting fuel like wood or coal. And they have directed bakeries to convert to use gas or other green fuel in the next 1 year. What is the additional PNG commercial volume do you expect from this move? And also correct me, if the PNG commercial volume increases, then it also boosts the overall price realization of a company. Because as per our understanding, the PNG commercial is the costliest product among the all.
I think when you refer to commercial, within commercial there are 2-3 categories. The realization which is linked to use of LPG commercial bottles is generally higher, which is I think falling into a restaurant category. I'm not too sure about bakeries. We may fall in which category. Mostly, yes, there will be a better realization, but not as high as a commercial A, which is linked to commercial bottled LPG. Okay, that is one. Just to add with respect to the court order, I think based on the assessment, we have a preliminary assessment of number of vehicles in our geographies. Okay, within that, if I take number of commercial vehicles which are mostly on diesel are going to get impacted initially, and that number is around 4 lakh in our geography. And currently we have around 38,000 such commercial vehicles already on CNG, which is about 9.5-10% penetration. So we see that this commercial vehicle segment could be a volume churner for us if something happens, because that could be the first step to control pollution in terms of fuel vehicle related fuel burning.
Further, the volume offtake will not be very huge in terms of the bakeries and others, because we are a small establishment and it takes some time to connect to them also. It will not be a very significant thing.
Sir, next question, sir. CNG volume is growing more than 10% last 4 quarters consistently. Now, what would be your guidance for the CNG volume in upcoming years? will it inch up to the 8%, 9% for the FY26-27?
No, if you talk about the overall volumes, we were thinking about 8% year-on-year growth. But in 9 months, we have already clocked 11% growth from the last whole financial year numbers. So if we take Q4 also into account, maybe we will clock around 12.5 to 13% growth year-on-year. Now, maybe next year we will not be able to have that much number, but we are comfortable that around 10% numbers we will be able to clock next financial year also. And which will be definitely, CNG will be a main contributor in that growth along with industrial and commercial segment.
Thanks a lot, sir. I'll come back in again.
Thank you. Ladies and gentlemen, we request you to restrict the questions to 2 per participant. In case of any follow-up question, please rejoin the queue. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, good evening. Just firstly on the pricing and margin side, so you did take 2 price hikes of 2 rupee and 1 rupee kg each on CNG, but the margin still has dropped. So are you looking back to go back to, let's say, 10 rupee or higher margin as we were doing, let's say, in the last several quarters, or this should be seen as a more stabilized margin now?
The margins have, there has been some impact because we were reassessing our portfolio and the price hike has happened in late of November and second rise has happened somewhere in January. So there was some delayed response, and secondly, we have contracted some mid-term gas also on from the existing suppliers for giving a repeat order. Thirdly, some reinstatement of APM gas has happened as late as 16th of January. So the impact on the margins will be slightly reduced, you are right, but it will not be maybe as low as the Q3 results. So we may be improving our performance in Q4. And if you see, last year we have had EBITDA per SCM of 13.95, and for this 9 months we have EBITDA per SCM of 10.3 rupees per SCM. So it is not very off the mark of the guidance which we have given about 10 to 12 rupees. So we expect similar range to continue, and depending on the price of LNG, Henry Hub and other contracts, we may be very comfortable in this range, 9 to 11 or 10 to 12 range. It depends on so many other things, so we can't be very particular about what will be the range. But we are in a comfortable position because of, one, that we have made some procurement portfolio adjustments, and second, there have been reinstatement of APM allocations on 16th of January.
Sure. So you mean to say no further price hike is needed in that sense after this restoration of the APM allocation?
More or less, 50% of the gas cut has been restored, and we have already taken a hike in the range of 50%. Okay. One factor which is crucial as of today is also exchange rate, because exchange rate has been inching up and around 85.5 or 86 rupees. So that may have some impact depending on how it moves going forward. But more or less, we are back to almost neutral situation of what we were in October mid as of today in January, I'm saying.
And just to add, I know that investors are more particular about both the things. One, that the margin, second is the volume. So we also have a very clear-cut, line of sight for volume growth, which is more important for the longevity of the company. Margins can adjust for some time, maybe slightly higher or lower.
Understood. And on the volume per se, so you have been, I think, talking about close to 7-8% ex of UEPL. So with UEPL, can we look at double-digit growth now? I believe UEPL will grow at a faster rate than the core portfolio.
We are already clocking double-digit growth as of now. If you see 9 months this year compared to 9 months last year, okay. And UEPL, all the 3 geographical areas as well as Raigad, both will see at least 20% plus growth. And there is a usual growth in GA2 as well as GA1, some margin, at least usual growth of 4.4 to 5%. So we are hopeful that at least for few quarters we will see double-digit growth. And as Sir said earlier, we can achieve an annual growth of around 10%. Also, there is now that High Court order is there. We hope that that will turn out positive and we will be able to achieve more.
And also in terms of your CNG,
Yeah, 8% what we had said is, we have already outperformed standalone on MGL basis only. If you add on UEPL, because it has a small volume, but the growth is much higher there, maybe more plus 20%. So collectively on consolidated basis, we are around 12% growth as of now, 12 to 12.5%. So in the year end, we expect it to be around 13% or 13.5%. Next year also, we definitely should be at least in the double digits, yes.
Sure, got it. And also...
Thank you, Mr. Murarka. May we request you to please rejoin the queue. We have participants waiting for the turn. Thank you. Ladies and gentlemen, you are requested to kindly restrict your questions to 2 per participant. The next question is from the line of Probal Sen from ICICI Securities. Please go ahead.
Thank you for the opportunity. So just wanted to get a little bit of sense of what are the capex plans, if you can break it down between the different GAs, including for Unison. And also if you can get a sense, give us a sense of how much to be spent on CNG, how much on network and so on. That was my first question.
UEPL standalone should spend in the range of around, this year at least 125 to 150 crores. Okay. And it will be further up maybe next year, because we have now have the ground and the groundwork is done, so we'll be able to do more capex on CNG stations, etc. And it could go from 150 to 200 crores next financial year. As far as MGL is concerned, already 650 crore plus capex has been done in this 9 months period, and we expect anywhere between 200 to 250 additional capex in Q4 as well.
Okay.
Out of these, major will be on steel and low pressure pipelines, okay, and roughly 200 crore or plus minus 10% on CNG, and balance is on steel grid and LMC, last mile connectivity.
Okay. Sir, in terms, you mentioned about the EV, initiatives that are being taken. Any sense you can give us of when these actually start contributing to revenue in a meaningful way, and what kind of potential do you actually see based on the investments that have been made as of now?
We have started 2 investments in EV. One is 31% equity in 3-wheeler manufacturing company in Bangalore, and second is a recent joint venture which we have made with IBC, International Battery Company.
Right.
So in this IBC, we are investing around first phase 380 crores, with a total capex of 870 crores. And after depending on the performance of the first phase, we can go up to 5 gigawatt factory. The first phase will be 500 megawatt 2 plants, so 1 gigawatt factory. So it depends, like 1.5 years we will be able to commission phase 1, and maybe within few more months phase 2 of another 500 megawatt of 1 gigawatt plant. So it will start earning revenues from 1.5 years from now, and it will gradually pick up. We have 40% equity in that joint venture and 60% is with the partners. The numbers will be in phase 1 around, if you can get me on that.
We are roughly estimating, or while estimating this, evaluating this project, we have taken a discounted rate of around 18% or so. So we expect that return should come, because it's a very, very niche kind of area, so higher rate has been applied. Okay, but
18% IRR is the assumption, sir?
Yeah.
Okay.
On the whole project cost. Okay.
Maybe 1,000 crore revenue is there around that number for 1 gigawatt factory.
Sorry, sir, 1,000 crores per gigawatt?
Yeah.
Okay.
Around that number, 900 to 1,000 crores.
Understood.
It is a very, very primitive stage. Why I'm saying, because that per cell realization, could range between $100 to whatever. So right now we are not in a position to give you the confirmed number, because once after setting up the plant, already the trial runs are going on for testing the cells which are manufactured by the prototype plant already in South Korea. So once we get full customer base and understanding of this, we'll be in a better position to talk about what kind of sales revenue and margins will come. But surely when you look at the EV cell as a market, the kind of capacity which we are putting up is very, very small compared to the requirement in India, because currently all the EV cells are being imported in India and then battery packs are made. Okay, so most of the manufacturers who may not have their own facility of having the battery pack and the EV cell tie-up, we will be able to push this. And considering the demand in India, based on whatever survey or the studies we have done, 1 gigawatt is a very, very small number. Okay.
Sir, if I can ask a follow-up, are we already speaking to some customers with respect to this project?
The company is not only speaking, but the batteries which are manufactured in the prototype plant at South Korea are being put into the vehicle with the customers. They are tested. We are taking out the reports, and all that has been already done since last 1 year. Okay, and most of the reports as of now are positive, and we are hopeful to that customers.
We are already in discussion with some of the customers, and very positive response has come. But the final tie-up of contracts will happen once we get more clarity on the final deadline when the project will start producing, and there's enough time for doing that.
Understood, sir. Thank you very much. I'll come back in the queue. Thanks.
Thank you.
Thank you. The next question is from the line of Gagan Dixit from Elara Securities. Please go ahead.
Yeah, thanks for taking my question, sir. Sir, for the CNG, this allocation, when you say 50%, so that 50% means that $6.5 that's the APM gas that you are getting, if my understanding is correct.
That's right.
Okay. And so what are the overall this allocation for the CNG? I mean, this other than the APM, I mean, what is the new well gas share and what is the HPHT gas?
Currently, as you said, for CNG we are getting 1.5 million. Another 500,000 of APM is available for domestic. Okay. Other than that, for Q3, company had tied up 1.25 MMSCMD of Henry Hub gas through almost 4 contracts, and HPHT of 500,000. And there is an old Reliance contract linked to Brent of around 0.1 MMSCMD. So we were left with hardly 0.04 or 0.05 for an average volume. After this quarter, we have hiked our Henry Hub contracts to almost 1.45 MMSCMD. Okay, and we are getting small amount of NWG, but the long-term clarity on the NWG is not available as of now. Maybe it will start very soon in this month only. Then we will be able to announce what is the contract with respect to NWG. We expect that it should be in the range of 0.25, maybe this month mid or so. Okay. Already there is a HPHT contract which has come up in this month from ONGC and RIL both, and some more HPHT bid is going to happen most likely in April by RIL, almost of 5 to 6 MMSCMD. So, and when you compare, today NWG price and Henry Hub price or HPHT, there is not much difference. Okay.
And sir, my second question is about.
You, sir. May I request you to please come back in the queue, sir?
Okay. Yeah.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you and good evening. So, if you look at the cell manufacturing project, is there any detail you can share in terms of the overall tax rate you'll have to pay for that project? Could it be at 15%? And secondly, any sense you can give us on the VAT rate or GST on the capex and the inputs and the final lithium-ion cell?
See, this is, as I told in the last time also, 875 crore is the total capex. 40% we are funding as equity. And for phase 2, that means from moving from 1 gigawatt to 4 gigawatts, the capex will be in the range of around cumulatively 3,700 crore. Tax rates on that.
I will come back to you separately on this because I don't have the figures handy. Otherwise, I would have discussed them.
And the selling price will be on the market price, like whatever imports are happening from China. Similar prices will be offered to the market because that is the market price as of now. So whatever calculations we have done for the profitability of the project is based on import parity price of China. The positive side of it is, which we have not considered, is in case some duty is levied on the imports from China, especially on the import of battery cells, that will be upside to the project, which we have not considered on the base case. So things may look very positive, as Rajesh explained, that out of the total requirement of more than 100 gigawatts, we are just talking about 1 gigawatt and maybe other plants which are going to announce or expected is not more than 7-8 gigawatts. So we expect that if more flip or more push is given to the domestic manufacturing, this can be a very good initiative because we are the only company who have the product ready, which is tested on road from the pilot which has been set up at Korea, and the same setup is going to be repeated in Bangalore. So that's why we are very positive about this investment.
Okay, on the consolidated numbers and the standalone numbers, if you adjust for the difference, I get a revenue of 275 crores and EBITDA 154. So is that number correct for UEPL, which means, in third quarter it's about 102 crores revenue and 84 crores. The margins seem to be very high. So can you put the UEPL performance in context based on these numbers?
Yeah. The revenue that was generated during Q3 was 102 crores for UEPL. With a net profit of about 1.27 crores, and cumulative for the 9 months ended, UEPL earned 275 crores, and the net profit after tax generated is 17.51 crores.
Yeah, so the question is, at the EBITDA level, numbers are very high. So what's happening below that?
On a consolidated, you may see that compared to MGL standalone, there is a minor reduction. Okay. Now that happens because of the investment which MGL has made, and there is a large component of authorization cost which gets amortization on a consolidated basis. That amortization is little higher than the profit which are earned currently by UEPL, and that is why on consolidated basis you may see MGL plus UEPL standalone does not add up to MGL, or it is slightly lesser than MGL. Okay.
No, but based on the numbers you have given for... Yeah, sorry. Please go ahead.
Am I able to answer your query or inquisitiveness on consolidated results?
No, that is fine. But if you go by the numbers you have shared for UEPL by itself, from EBITDA to the PAT, there's a fairly substantial reduction. So is there a large component of depreciation and interest there? And the margins are pretty high. So from that margin, the net margin is very low. So what is happening below the line in terms of depreciation?
Compared to MGL, there are two components. One is depreciation, you are right. Another is interest cost is also there in UEPL. Okay. So if you take cash EBITDA, it is generating around 50-55 crore cash EBITDA per annum as of now. And this interest is also within the group. It is MGL's loan which is getting accounted as a finance cost in the books of UEPL.
Okay. Then one last thought. If you look at the vehicle additions and the growth in the CNG vehicles of around 46%, year to date, do you think this current run rate in your GAs will sustain, or do you see some upside in the next 12-18 months? What is the sense you get on vehicle additions? And can you give us some split on the number of vehicles being added across categories?
We have already, if you compare last year 9 months, we have had around 57,000 vehicle addition as compared to 71,000 vehicle addition in our GAs in these 9 months of this current financial year. So if we take Q4 into account, maybe we will be close to 1 lakh volume addition, which will be very high as compared to our last year and previous year's performance. So you're right, 46% growth has happened across the India on CNG, which has outperformed so many other fuels. And this impact is definitely a good sign for CNG whole as an industry as a whole. And we expect that the growth numbers which we are seeing of 10% for 9 months comparison of last financial year, we will be able to maintain it for at least 1-2 years, and from there we will see how the sector is performing.
Thank you very much, and wish you all the best.
Thank you. The next question is from the line of Kirtan Mehta from Baroda BNP Paribas Mutual Fund. Please go ahead.
Thank you, sir, for the opportunity. After this UEP merger, will we be able to use any tax synergies? Are there any past tax losses which can be utilized?
Yeah, in the books of UEPL, currently there are tax losses and accumulated depreciation around 35 crores, both put together, that we will be able to absorb. Also the capex which they are incurring today, 150 crores odd, and they are not able to absorb that depreciation. On a merged entity basis, we will be able to absorb that early. So, of course, UEPL would have absorbed both accumulated losses as well as the capex, but it would have taken, let's say, 3-4 years from now, whereas MGL will be able to take that benefit immediately.
Right, sir. The second question was about the APM reinstatement. I believe the next round of the reallocation would be around February 16th or so. So are we confident that the 51% would remain at the similar level during the February, or is there a possibility of part reversal again?
I think readjustment has happened 2-3 times. One was 16th October, then 16th November, and now 16th January, this reinstatement has happened. Earlier was the deallocation, means 2 cuts were there. Now in our information, as far as we understand, the next deallocation or readjustment will happen somewhere from 1st of April, because around 7% per annum is recommended to be reduced from APM and put into NWG. The other development we know is that whatever cut from APM will happen will be allocated to CGD entities on pro rata basis at NWG prices. So basically the gas will be available APM, the same quantity will be reallocated on pro rata basis to CGD at NWG prices. And we expect that to happen somewhere from 1st of April.
Right, sir. Thank you.
Thank you. The next question is from the line of Pratyush Kamal from Incred Equities. Please go ahead.
Hello, sir. Yeah, so I have few set of questions which I wanted to ask. First is regarding your sourcing. So you source you do have a couple of contracts which are linked to Henry Hub and some are linked to Brent, right? I just wanted to understand, like, what is the pricing mechanism for these contracts, and what is the general sourcing mix for you? How many, what percentage of the total volumes do you get from Henry Hub versus Brent versus APM, etc.?
See, general pricing under this contract has a slope linked to the index. So in case of Henry Hub, it is Henry Hub is the index. There will be a constant, there will be a slope to the index and some fixed cost, okay? Whether it is a Henry Hub contract or a Brent contract. So this is the normal term contract structure, okay? As far as MGL is concerned, I already said, I think in the last question, overall including domestic, we are as of now getting 2 million plus APM. As of today, that means in the January, we have already tied up Henry Hub contracts, all contracts put together around 1.45 MMSCMD. HPHT is around 500,000, okay? And rest is spot and whatever NWG we have. Small amount of NWG is coming on a short-term basis, but as Sir said, there will be a long-term allocation or a allocation like APM in the near future, maybe this month or by April or so.
Okay, sir. And what are the slopes and fixed components when you talk about the Brent-like contract and Henry?
Confidential between the supplier and us. we cannot disclose them in the public domain.
Okay, sir. And what is the landing cost approximately for you when you talk about the Brent contract versus the Henry Hub contract? The landed cost for you, for the company.
So as of now, considering the indices, with respect to Henry Hub, it ranges between $9.5 to around $10.5. HPHT is around, that is I think available in the public domain. Including transportation, it should go around $11, which has $1 per MMBtu transportation and around 10.25 or so as a basic rate. Yeah.
Understood. And Brent one?
Sorry to interrupt you, Mr. Kamar.
Brent is an old contract and that is around 7.5 inclusive of transportation as far as we are concerned.
Okay, thank you.
Thank you. The next question is from the line of Sabri Hazarika from Emkay Global Financial Services. Please go ahead.
Yeah, so first two questions. Firstly, your volume breakup between GA1, GA2 and GA3 and the outlook for GA3. I mean, last time you mentioned 0.6 to 1 MMSCMD sort of like potential. So any revision on that?
So as of now, for 9 months average, I will give you GA1, we have sold around 1.92 MMSCMD. GA2 is around 1.85 MMSCMD. 0.245 is GA3. That makes total sale of around 4 million for this 9 months average. Okay. If you look at the growth in GA3, last year average was around 0.163 and we are today at 0.245, which is a growth of almost 49-50% over the last year average. So that is the growth in GA3. If you consider GA1 and GA2, GA2 is double digit and GA1 is in the normal range of 4 to 5%.
Okay, sure. And small question, in terms of kg basis, what was the CNG volumes in Q3?
CNG in terms of kg. Average for the 9 months. For the Q3, it is 2.14 kgs, 2.14 million kgs.
2.14 per day, right? Yeah.
Yes, per day, kgs per day. Okay, and in terms of SCM, it is 2.92.
2.92. Fair enough. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Saurabh Handa from CT Group. Please go ahead.
Yeah, thank you for the opportunity. So on your question on your comments on the number of CVs in Mumbai, say around 4 lakhs, and currently the penetration is 10%. Hypothetically, if a similar sort of directive comes as we saw in Delhi, could this number go up to like 25-30% thereabouts? I mean, just to get a sense of what is the realistic penetration one can assume if you have similar directives as we've seen in Delhi in the past.
Yeah, you're right. I mean, the increase will happen in commercial first because as happened in NCR, the commercial vehicles are first, generally the first vehicles which gets impacted because of court or the policy intervention. So in case that happens, so our penetration will go up because we have certain depots in DEST also, which we have opened on an experimental basis for commercial vehicles. So we can open further outlets also in our DEST captive outlets for booking for the commercial vehicles. Further, we are increasing infrastructure particularly in GA2 and GA3 for keeping in mind the commercial vehicle increase. And GA1 also we expect that we will do some management to create more infrastructure for commercial vehicles. Yes, the penetration can increase in coming few years.
Saurav, if you look at current 3 quarters penetration, we have added more than 1% of the existing population. It's because roughly 4,600 odd commercial vehicles are added in these 3 quarters put together, which is more than 1% of the total population in our GAs. And with the High Court order, it gets a little push also. I think we expect that the numbers could be high, but to give a penetration of exact percentage is very difficult as of today.
And sir, what is the usage per vehicle for, say, a typical commercial vehicle?
So, it varies for different commercial vehicles. If I talk about heavy commercial vehicles, so usage is about 30 kg per day. This is on average basis. So LCV is about 25 and the small commercial vehicles consume about 7.5 kgs, on a daily basis.
Okay, that's very useful, sir. Thank you so much.
Thank you. The next question is from the line of Vikas Jain from CLSA. Please go ahead. Vikas Jain, please go ahead with your question.
Hi, thanks for taking my question. I just wanted to understand currently of about 50 MMSCMD of gas that ONGC is producing. I think about 6 has been taken away as new well gas. Of the remaining which is there, roughly how much is being allocated to priority sector in city gas? And that's question, that's the first part of the question. Second thing is when you see a change in allocation again on 1st of April, maybe another 5-6% will again go away, say about 2 to 3 MMSCMD. Is there a chance that LPG or some other sector you see could bear the impact more than city gas? So that's something which I wanted to know. Thank you.
I think the numbers will be better available with GAIL, but broadly what we know is around 19 MMSCMD was coming to CGD, which got reduced to 16 MMSCMD in the first cut, and it went down by another 2 MMSCMD in the second cut. Now 3 MMSCMD is restored out of it, so maybe around, if I'm not wrong, maybe around 15-16 MMSCMD is coming to CGD sector. And but overall numbers from ONGC we don't have proper clarity. Maybe not 50 mm is not available as far as we understand. It is lower than that.
And sir, any chance of any other sector getting reduced allocation as compared to city gas?
I mean, you have to ask this from ministry, but yes, I mean, if you see some deallocation has happened and now the reinstatement has happened, there are two things. The isolated fields, if they get connected to the main grid, then some gas can come to CGD. Or in case the ONGC increases the production of APM, then the gas can be made available to CGD. The other gas which is going is to fertilizer and partly to the power which is on the isolated fields, or the gas in the northeast which cannot come into the main grid. So, I mean, I don't think there is much which can come up besides the fact that some isolated fields get connected to the main grid or ONGC increases the production. I don't think fertilizer, which is already giving a lot of subsidies on the government side, will be taken out from the allocation.
And any chance of maybe some kind of a swap that although those isolated fields and those customers get ONGC gas, but they are charged a higher price and effective swap with you, or effectively if we do that, then those become unviable? Is that?
I think government is already seized of this matter. GAIL and Ministry of Petroleum is already seized of it. There are actual limitations of doing the swap also because the physical customer should be able to take at that price, at the increased price. They should be customers at that particular isolated area to consume gas physically, then only swap can happen. So the matter is between government and the physical limitation, as well as maybe putting a more compressors to link isolated fields to the main grid. Then this mechanism will be able to work.
Thank you, Ashish. Thank you.
Thank you. The next question is from the line of Niharika Jain from Acuitas Investments. Please go ahead.
Hi, thank you for the opportunity. So my first question is, I think in the call you have mentioned that we would have some impact on forex. Now, so the APM gas and all the contracts, is there a hedge for us, or all the contracts, even including APM, are unhedged for us as far as Forex is concerned?
Our dollar exposure, because all the gas we purchase locally is dollar denominated, are not hedged. Okay? It's not hedged. And if one wants to hedge for a INR transaction, only the prices are dollar denominated, actual transaction happens in INR. For this, RBI, to my understanding, which I had checked few years back, allows only a forward contract. So there is a trade-off between whether you want to pay upfront forward cost and increase the cost of the consumer or you remain open and see. In the past, remaining open has benefited us, whereas some entities who took forward, they had a higher cost. But yes, today the time is such that we may still evaluate what needs to be done going forward, considering probably expected movement in the forex rates, INR and the dollar.
Is my understanding correct if I say that the rupee has depreciated by 3% in, say, Q4, so my cost directly gets impacted by 3%, right?
Roughly, my estimate is, you are right in that sense. It adds around 22 to 25 paise per rupee increase on an overall company basis. A rough ballpark calculation.
But you are right, whatever the foreign exchange devaluation all happens, that will be reflected in the price, because APM price and others are all dollar denominated.
Partly we are indirectly hedged because we link our industrial and commercial prices to the alternate fuels, which are also derived from dollar and then price in India. Okay. And I suppose petrol diesel prices are also linked to Brent in a way. They also should be linked to forex. So in a way, our input as well as output both gets natural hedges there to a very large extent.
Okay. And so I assume that a lot of fertilizer plants take shutdown in Q4. So do we get more APM allocation if that happens? Fertilizer sector is taking a lot of shutdowns.
That happens. I mean, GAIL does this mechanism of what is the plan for the future, or when any plant is going for shutdown or not. So that adjustment they do, and do some minor adjustment in the allocation on daily nominated gas quantities. So those are things which we are not privy to that information. Maybe GAIL will be better place to answer that.
Okay, understood. And the last question, I think I missed the part. We said that we are invested in IBC, but when can we see the revenue getting generated from that entity?
The first phase we expect another 14 months time the plant will start operating. Of 500 megawatts plant, 14 months from now.
Okay, 14 months from now. Okay.
And second phase another 3-4 months from that period. That means in 1.5 year time we should be able to see 1 gigawatt factory coming online.
And do we have contracts in place, or will we be getting the contracts after once it gets started?
There's sufficient time, so we will get contracts once we get more clarity about come closer to the production. But still, now we are testing the product. The results are very good. So we have not yet finalized the contracts. We will be doing it maybe 1 year down the line.
And just from a very macro perspective, considering that it is a very evolving technology, don't you feel that it will be a big risk if the prices just crash down, because China is known to do that? We can talk about solar modules also. The price has crashed down and it has been crashing down every year. So, being internationally linked, won't it be a risk, or are we thinking something on this front also?
No, we don't consider it to be a risk. You are right. China has a maximum production of the battery cells. But again, there is a protection mechanism by the government to such type of pricing mechanism by China in past also. We have seen with solar PV cells. So promote indigenous PV manufacturing, the government has supported the industry quite a lot. But having said that, we are very much confident that we will be able to source very competitive raw material, lithium ion and other products which are required for battery cell manufacturing. We have a very strong partner in South Korean partners, and we'll be able to manage the market in terms of whatever be the market pricing mechanism. And government, as we understand, is going to protect Indian market to a great extent in terms of levying duty, because we think that moving away from China is a very much prevalent mechanism by different countries, including India. So we are very confident we will be able to survive different price mechanisms as and when they appear in market in the battery manufacturing sales.
And what will be like to add one more point here, when you manufacture cells locally and you will get the live user experience, you will be able to manage the life cycle of the cells and the battery properly when an Indian company talking to the local consumers here. Whereas in case of China, when there are problems which crops up at the cell level, the battery pack manufacturer does not have any answer. Okay, so there I think technologically and in terms of performance, an Indian company will have a very, very good upside and edge over the imported cells, and that is going to be one of the USP in the project which is done locally here with technology as well as the setup of the plant locally.
Sorry to interrupt. May I request Ms. Jain to please rejoin the queue? We have participants waiting for the turn.
Yes.
Thank you. The next question is from the line of Devang Patel from Samiksha Capital. Please go ahead.
Sir, if you can please quickly share data points on what is the share of BST buses and three-wheelers in our volume, and what is the 9-month growth in each of these two segments?
Could you repeat? So if I have to tell you the customer segment, so auto rickshaws, the three-wheelers which you asked, they are the highest consuming segment. They consume about 34% of the total volumes that we sell. BST, and others put together, I will call it the state transport undertakings, which also includes MSRTC, NMMT and TMT. They are consuming about only 6% of the total volumes that we sell. And just to add to what Mukesh has mentioned is that in three-wheelers, almost 98% is CNG three-wheelers. As far as BST is concerned, we have around 2,000 buses of CNG and around 1,000 buses on diesel and EV put together.
Sir, and what is the growth in the BST buses? Why in Delhi we've seen the number of CNG buses also come down. With this panel being set up, is there a risk to three-wheelers and BST buses volumes?
No, it is the other way around. You are right. BST buses in last few years have come down from 4,000 numbers which were running on roads to 3,000 in total. But going forward, we think that the electric buses which were expected to be around 2,000 have not come on roads. So if this particular committee will examine the whole thing and give the recommendation to the government for implementation, and in case some uptick is there, then we can see more buses coming on road, and that can include a major portion of CNG also. But we have to wait and watch about how the Transport Ministry and BST take a call on that. But yes, the overall number of BST buses have come down, including CNG buses have also come down.
Just to share the physical numbers, during the quarter, MSRTC alone has added 142 CNG buses. Okay. And BST, TMT and NMT put together has added 37 numbers of buses. And the major part is BST. So probably BST, because they don't have enough number of buses to run their routes, have started adding